Well, I think one of the key findings is 2022 was one of the hardest years in the industry. We almost call it a distress scenario in the industry, and I think one of the key findings was, the mutual companies survived it pretty much. They're very stable. They look for long term. So, I think that's the number one key. It was one of the worst years, but they survived it.
So premiums are up, one, due to rates. A lot of mutual companies are taking rates in order to, in response to the trends that they're seeing in the conditions, the market conditions. Operating results are down due to those market conditions. Seeing above average weather activity, the hardening reinsurance market, they're taking on more, they're retaining more of that loss. Also the investment market as well. Operating results were constrained by the adverse impacts that we saw in the investment market in 2022. So those were some of the major drivers.
The property writers really took a double hit. The reinsurance costs, at points were over 50% increase in costs, and the cat losses were one of the worst years in history. So those were the two major impacts on the mutual companies. The participation from the reinsurers, they started to back away. So a lot of the mutuals had to take a higher retention or co-participate in upper layers. So today, into 2023, they are taking a bigger piece of the pie.
Inflation is a big trend that we're watching there with the, exposure increases across the board. As I mentioned, insurers are taking rate to address that, but, it is impacting their combined ratio. It's causing that to be elevated, to climb. Another thing is the weather activity. We're seeing an increase, and we have seen an increase over the past few years in secondary perils, severe convective storms that, may not be as large as a catastrophe event, but they're still impacting mutual insurers significantly, causing losses to increase. And along with, again, the reinsurance market, those are the main things we're kind of watching right now as it relates to the combined ratio.
Losses increased significantly on a lot of the mutual companies. The normal, let's just say the normal car accident, might have increased, from 3 or 4 years ago, 30-40%. So the higher claims. So this hurt them because they weren't able to get, for this year, the rate increases. But now in 2022 and 2023, they are getting rate increases. Now, of course, that takes anywhere between 12 to 18 months to earn through. So in 2022, it really impacted them.
So the size of a mutual can, it can drive certain results overall. With some smaller companies, we generally see that underwriting expenses may be a bit higher than some of those larger companies, but that's offset by they may write in, a niche market. They may write in a specialized market where they, know the risk very well, and then they're able to produce lower loss ratios to offset that. Whereas on the other side, with larger companies, they may hold more robust investment portfolios. They may get some better returns on that investment portfolio as opposed to smaller companies may, but that may be offset by higher losses, on that side as well. So that's some of the divergence that we see between the sizes of mutuals.
Well, number one is getting the right rate for the exposure. So we're seeing a lot of companies getting sizable rate, actually, throughout the year. Some of the other things are that, just maybe pushing away some of the property exposures, going into more liability lines. That's pretty the two most immediate things that they can do.
So we're, overall, the financial strength of the mutual segment has remained strong. We haven't really seen much of a divergence from where we were last year from a ratings perspective. The only thing I will say on that is we have seen a bit of an increase in negative outlooks. I believe they increased about 5 or 6% from the prior year. So we're definitely seeing the impacts a bit, but overall, there really haven't been large trends that signify that there are any major negative rating implications at this time. We'll see how this develops and how this continues to progress. But again, at this time, the rating side has remained relatively stable as it relates to overall ratings. We're just seeing a bit of an increase in the negative outlooks.
We have a rating on certain segments. The ones who are personal property writers, we have a negative. Personal lines consist of auto and homeowners. Auto makes up a vast majority of it. And, so right now we have a negative on the auto. Rates are compressed because the states are not allowing rate increases. So with auto being negative, it forces the whole personal lines to be negative because it's a vast majority. And I think also on the commercial side of the part, I think we're negative on most of the lines of business. So overall, it's a negative outlook on the industry.